Good morning, ladies and gentlemen. Thank you for standing by. Welcome to First Mining's conference call and webcast presentation to discuss the merits of the recently announced stream transaction, as well as our recent developments. On the call with me today is Dan Wilton, CEO of First Mining. As a reminder, all participants are in listen mode only, and the conference call is being recorded. After the presentation, there will be an opportunity to ask questions. To submit the question, please use the Q&A button on the top of the screen. Before we begin, I would like to mention that some of the commentary on today's call may contain forward-looking statements. You should be cautioned that actual results of future events could differ from those noted in today's presentation. I would like to remind everyone that the presentation will be available for replay on First Mining's website following the conclusion of the call. Replay information and the presentation slides accompanying this webcast will be available on our website at firstmining.com. I will now pass it over to Dan Wilton.
Thanks, Spiros, and welcome everyone. And thanks for joining us here this morning. Obviously, it's been a busy couple of weeks for us here at First Mining Gold, as you can undoubtedly tell. And we're very excited to talk about a couple of the really important strategic moves that we've been able to execute on here. So without further ado, I'll just kind of dive right into it. Spiros had mentioned that we're going to be making some forward-looking statements. Most of this information will be on our website, including the presentation after we complete this. So when we talk about a couple of really important things that we've announced in the last couple of weeks, really focuses on two critical strategic outcomes. One is us securing the strategic funding for our SPRINGPOLE project, and we announced that yesterday with a silver stream with First Majestic. We'll talk a bit more about the specifics of that, but the really important part of that is that it gives the company all of the capital it needs to get SPRINGPOLE through the environmental assessment process and to the outside to an EA decision. So we're very excited about that. And obviously the second transaction announced last week was us combining our Goldland project with Goliath inside Treasury Metals. And I know we've had a lot of really positive feedback from our shareholders on that. There's still a few questions about the mechanics, which we'll touch on a little bit as we go through the presentation here. But that is, I think, transformational for that project particularly, in that we think that, you know, we're ending up as the largest shareholder of what we think is one of the more exciting one of the most exciting development prospects in Canada in the gold sector. So very exciting about that. But let's just talk a little bit about some of the specifics here. So this strategic funding on SPRINGPOLE, $22.5 million US, which is a 50% silver stream sold on SPRINGPOLE. As I said, I think we're going to fund the project through 2023 with that. And why did we do this? I mean, there were a number of reasons, but first and foremost, we've heard from our shareholders, you know, for the almost 18 months that I've been here, that they were really key on us pursuing less dilutive financing structures. And that's what we have delivered here in terms of this quantum of capital being enough that we can have really the full runway and answer that question as to how we're going to fund SPRINGPOLE through to the key milestones. This is an opportunity for us to do that in a manner that's not as dilutive to equity as said we've been issuing shares. But importantly, it's appropriately sized, and it leaves SPRINGPOLE really substantially unencumbered. The all-in sustaining costs remain really robust based on our PEA, you know, sub $600 on a byproduct basis. And importantly, none of this stream affects the gold. And this is first and foremost a gold project. There's a lot of people who weren't actually really even aware that the project produced this much silver. But I think it leaves us with a really robust project and a couple of really important points about our partnership with First Majestic. You know, this is a group that obviously we know very well. We were co-located with First Majestic. Keith Neumeyer, our chair, is the CEO of First Majestic. But we've had a lot of really deep technical interaction with First Majestic and our partners there over the years, as they've given us advice and guidance on a lot of our technical work, be it resource work, metallurgy, as we've been advancing the PEAs. So interestingly, the due diligence process was kind of a quick update because everyone knew the project already, which was great. But I think this really does increase the importance of that strategic relationship, and obviously, I think it's a real sign of commitment from First Majestic and from Keith on his support of this project. So I won't go through too many of the outstanding details there. It sort of lays out the timing of it. Importantly, the first 10 million US comes in at closing, which we're expecting in early July. We're getting that 25% in cash and 75% in First Majestic shares. And anyone who knows First Majestic knows that it's one of the most liquid stocks on the market. So I think we calculated our largest share position that we will own in First Majestic will be less than 10% of their average daily volume. So we will have no problem converting these shares into cash when we need to. And the second phase comes at completion of the PFS, which we're expecting, early 2021. Right where we're guiding for December, I think, we'd be very comfortable. We're not taking many delays, but we think the PFS probably slips into January at this point. But this is not a far out milestone, nor one that we're concerned about. We're very confident in the direction the PFS is going. And then the third one is upon receipt of environmental approvals, either from the federal or provincial authorities. So it does stage the payments out, but importantly, this is 17.5 million US of funding coming into the company. We believe likely in the next 6 or 7 months, which is important to allow us to get the work done to get SPRINGPOLE really thoroughly and firmly into that EIS process. The other really important factor on this stream is that we do have an ability to buy back 50% of it prior to production. And you look at the analysis, that's something that I think it's pretty clear. If the project is going forward into production, that will happen. That leaves the project even less encumbered. Meaning that this really is a way for us, rather than leveraging our equity value, this is a way for us to leverage our asset value in SPRINGPOLE in order to deliver this funding. So we're very excited about moving this forward. Like I say, it's a short time frame here to closing this, which we should expect to close it in the first week of July. And that plays into our ongoing permitting time frame at SPRINGPOLE, which I think is obviously going very well. But the timeframes that we have talked about, PFS coming end of the year or very early next year, and still aiming to get SPRINGPOLE with a completed environmental impact statement as early as we can next year. Some of those timeframes are slipping a little bit, mostly just due to some of the complications around consultation with our Indigenous communities, and it's just where traditionally we would have been in those communities giving presentations. We're not really able to do that right now due to COVID-19. So we're all working together to figure out how we can continue to advance those consultation discussions with a lot of great willingness to do so from all parties. So, but I think if there's going to be one slip that's a result of COVID, I think that's it. So listen, that's really the streaming transaction. We're very excited about it. And again, I think this finally puts to bed that question of where are you going to get the money to get SPRINGPOLE through all these times? Because it's important to say this money is not just going to fund the work to move SPRINGPOLE forward. It funds all of our corporate costs from now through 2023 as well. So I think this really should put to bed, the dilution questions and dilution issues that some of our shareholders and potential shareholders have had. So that's the Silverstream transaction. Very excited about that. And then to pivot a little bit, just to reiterate one more time why we're so excited about our combination of Goldland and Goliath. This puts together two projects into something that is, in total 2 million ounces of measured and indicated resource and another 1.1 million ounces of inferred. This is really a district scale project. at a time, we've said this a lot to our shareholders over the years, but this is at a time when the industry really needs projects, and we're starting to see a heat up of the M&A market. We're starting to see companies moving other projects that they thought were sort of sitting on the back burner, moving them off the shelf and starting to move them into the development stage or into construction. So I think this bodes very, very well for this project. We think there's a really high probability of operational synergies. Goliath has its federal EA approvals for a mine and mill that's 25 kilometers from the Goldline pit. So we think not only from what's there right now, I think you can craft a really exciting opportunity around a development scenario, which we're going to be working hard on over the next 6 months. Really, a goal to kind of have a PEA out on that by the end of the year. But there's still an enormous amount of resource expansion potential, both at Goldline and at Goliath. And interestingly, in between the two is one of the areas that's been one of our highest priority exploration opportunities that we think, we can start getting some traction on that, demonstrate and test some of the targets that we have kind of to the southwest of the Goldline pit. That's all going to help, just that many kilometers closer to Goliath. So we're very excited about this. And then some of the important terms on this transaction. So we're going to become shareholders of it. The largest shareholder. When the deal closes, we'll have a little bit more than 40% of the combined company. That's 130 million shares of treasury, which have responded really well since the announcement. I think people are starting to kind of catch a bit of excitement about the vision of what we're putting together here. And then 35 million warrants, 1.5% NSR royalty, which 0.5% of that can be bought back for $5 million. And then $5 million in milestone payments. So I think if there's been one real question we've been getting from our shareholders about this, it's around the distribution, because we've told everyone we're going to distribute 70 million treasury shares and 35 million treasury warrants out to our shareholders. The process for that, I'll just touch on it slightly. It's basically going to be done most likely through a plan of arrangement. So we will likely, as we go towards our AGM next year, we'll set a record date, as we do for every AGM, for voting. And you will need to be a shareholder on that record date in order to receive shares in the distribution. So I think the process from there, once you set a record date, we'll then basically have a shareholder vote, which we will need as part of this part of the distribution. And then you will receive shares, shares of First Mining and the shares of Treasury and the warrants of Treasury. So the exact exchange ratio won't be set until we get right up to that record date, which is important. So listen, there's a lot of other questions that have come up about it, and we'll take more questions on it here today. But we've also are about to, if we haven't already, posted a frequently asked questions section on our website with a lot more detail and some examples of how we think this is going to work or how it could work. A lot of this, there's still some details for us to iron out, so we'll lead you in the direction of that in the distribution. But what we're excited about is that we as shareholders, all of us as shareholders, are going to become direct shareholders in Treasury. And I think, when you see sort of some of the positive momentum that we think we're going to generate there, we're very excited about it. So, but some of the really key benefits to our shareholders, in and above just, us becoming the largest shareholder of Treasury, I think this really does go to unlock value. And, we think back to a couple of weeks ago, not that long ago, shockingly, our share price was probably 50% lower than it is now. And we've been saying to people for a long time that the value of Goldline, which we think is, particularly combined with Goliath, really, really exciting. We just weren't seeing that. It's always been overshadowed by SPRINGPOLE. So I think this really does go to shine a light on that value, both on what we're going to hold and on what's going to get distributed out to the shareholders. And we still continue to have great exposure to the upside of this development project. We've talked about the timeline and some of the synergies. Really, building. The goal is you build only one plant, and that's obviously going to be really capital effective. But importantly, we're still going to be involved here. We're going to have 3 of 7 members on the board and 2 of 4 members on the technical committee. So particularly for this first year, and making sure that it's all going in the direction that we're excited to see it go in. We're still going to be very involved. But this will have this company as self-funding. So First Mining is not going to be putting any more money into Treasury. It's going to be self-funding, which again also goes to show that the silver stream helps leave us in a position with SPRINGPOLE where it really is fully funded, and helps us, streamline our focus as well. So, this leaves us in the end, I think, in a pretty interesting position. And this is a slight modification of our usual chart in our investor deck. But, when you look at what our cash on hand was at the end of the quarter, it's a little bit less than 10 million today. But add on to that the stream proceeds. Add on to that the current market value of the shares of Treasury that we're holding. I'd say add on to that some of the look-through value on Pickle Crow, the deal we did on Pickle Crow with Ateco Minerals, who's having some great success and working on the property right now. We've brought to bear and surfaced, we think, in excess of $100 million of value in the last couple of months here. And that's not a theoretical value. We're seeing it in the share price, which is great. But I think the share price still undervalues SPRINGPOLE, to be honest. I think with the value that we've been able to bring here, and we're seeing an acceleration of this. I hope all of us as shareholders can recognize and will benefit from the fact that the biggest questions that we've always had about SPRINGPOLE and about the company and how we're going to keep it funded, I think we can put those to bed now, which we're very excited to do. So, this just kind of shows again some of the activity in the last little while. We won't dwell on it too much, but all to say that even with all of this, and with the share price having moved to where it is, the fact that we are now really funded to get SPRINGPOLE over the long term through some milestones, we still think that we're showing really, really attractive relative valuation versus our peers. I mean, the average advanced developer, which is kind of where you'd put projects with a PFS going through permitting processes, trading at $65 an ounce, and we're at 12. So we still think there's a lot of upside from here. Particularly, we've so fundamentally changed the risk profile of First Mining as an investment by taking away this funding overhang. That we are very, very excited about how we think this is going to get reflected in our value. If not, over the very near term, then certainly, we think that this is something we're going to continue to work really hard to surface over the coming months. So very excited about that. So we won't go into all of these key takeaways. I think we're all familiar with the project now, but I hope everyone on the call can understand that these events of the last 10 days, and it's amazing that it's a lot of work to have gotten to these couple of things the last 10 days, but I do think it has fundamentally changed the outlook and the profile of First Mining as an investment, and I think really taken an enormous amount of risk out of this. So we're very excited to see what happens from here. But we also know that all these deals have raised a lot of questions. And so I think that was really the main intent today, was for us to be able to hear from our shareholders about any questions you may have or concerns. And I think at this point we'll turn it over to Mal, who's going to take us through some questions here. But thanks again for joining us.
Thanks, Dan. Morning, everyone. My name's Mal Kadovska, and I'm the Vice President of Corporate Development at First Mining Gold. Thank you for joining us. Just a reminder that we do encourage questions, and to ask your questions, there's a button at the bottom of your screen where you can submit your questions. So let's get things kicked off, Dan. On the topic of SPRINGPOLE, can you provide a bit more clarity and comment a bit more about our relationships with the local communities and the Indigenous communities?
Sure. So, we've been, SPRINGPOLE was acquired in 2016. The company put the project into the environmental assessment process with a project description in 2018. And we've been moving forward in that environmental assessment process through multiple rounds of consultation with our Indigenous communities and our other key stakeholders in the local communities. And have had very good support and active engagement on the part of our communities. So, there's still a lot of work for us to do in moving forward, and ultimately, I see as these projects advance toward pre-feasibility and feasibility studies, defining what economic participation looks like with our communities. But no, we've had very good support from our communities, and expect that we'll continue to. So we're very thankful. And I think this is one of the best places in the world to be developing a project. The local communities in Sioux Lookout and Dryden, and that area of northwestern Ontario, as I often say to people, like, it's a place where a lot of hardworking people get up in the middle of the winter and go outside to work in -40 temperatures. Like, this is a real kind of get it done place, and has always had a real focus on the resource industries. And so, yeah, we've had great support, really all across the board from our community so far.
So we have a question from a shareholder, from Ray, who's asking about with SPRINGPOLE, in regards to our focus now being on SPRINGPOLE going forward, how are we going to raise the rest of the money that we need to continue to advance SPRINGPOLE past 2023 into construction and production?
Ray, thanks for the question. And, we get asked that a lot. There is, excuse me. There's a lot of work we need to do between now and 2023 to define the project, through PFS, ultimately through feasibility studies, and to get it through the permitting process. So I always kind of say the construction financing decision will be one that we're not really pressured to make today. We're not really in a position to make today. But it's important as you take projects, through these various stages. So you just need to make sure that you're keeping as many options open as you can in terms of that project financing. And that was one of the really important considerations in the structure and the size of the silver stream, is that it's been intentionally structured to leave us with the maximum flexibility to look at a number of different project financing scenarios, whether it's, ultimately some construction financing debt. It could be another stream that gets put on a construction financing. It could be in conjunction with strategic partners, which we are, ultimately continuing and are going to be continuing to speak with. We think that SPRINGPOLE is a unique asset, and one that's very rare. And at some point, larger gold companies are going to be, that are already very aggressively looking for projects that can produce in the size and scale of SPRINGPOLE. At some point, we continue to believe that, one of the main paths forward for this will likely involve us having another strategic partner on it that can fund the construction of the project. But we got a lot of work to do quite yet. But importantly, just we've kept our options open and structured this silver stream financing to really give us the maximum flexibility at that point.
Sticking with the theme of SPRINGPOLE for now, can you talk about the perception of risk and the feasibility of SPRINGPOLE development 10 plus years ago as compared to today? What's really changed over the course of the last 10 years?
That's an interesting question. when they first discovered the portage zone, which was kind of almost by accident. You know, it was to great excitement and fanfare as they kept drills turning and ended up coming across, you know, hundreds of meters of continuous mineralization. And it's part of one of the things that we talk about. SPRINGPOLE really is a unique ore body. But lo and behold, it was discovered, you know, under the bay of the lake. And that's been one of the main perceptions of risk, and one of the main risks really since it was found. But what's different from 2010, 2011 to today is just the amount of work that we and our predecessor companies have done, the amount of real science and data that we've collected. You know, we've done 8 years of environmental baseline work, for example. And, you know, I think when people get to understand the data we've collected and the understanding we have of the aquatic environment in the bay of SPRINGPOLE Lake, you know, people don't appreciate this, but you know, for part of the data collection on fish species was catching and tagging 80 different fish of the 3 main species in the area, which are lake trout, walleye, and northern pike, and following these fish, so tag them with acoustic telemetry transmitters and putting receivers up in all the surrounding lakes and following these fish for 5 years. So we know exactly where these fish go at different points of the year, but it's that kind of level of rigor and data that's been collected on the natural environment that gives us confidence that we're going to be able to develop SPRINGPOLE in an environmentally conscious way, so that there's no long-term impacts to the environment. So you look today, not just on the environmental data, but just on the technical data. You know, before you'd done geotechnical drilling under the footings of the cofferdams, which we would need to build before dewatering the bay, you know, there is real risk in that if you haven't done the work to understand it. Well, we've done the work. We understand that it's competent rock under where we'd put the footings of the cofferdams. They've been engineered to a pre-feasibility level, and we've got now through our PFS process another round of really thoughtful look and project costing and feasibility work done on those cofferdams. So on kind of the key risks of the project, and particularly with relation to the technical and environmental risks around the lake, like it's been the difference between 10 years ago and now is it's been studied for 10 years and collected an enormous amount of data. And it's given us the real confidence that we're going to be able to do this in a responsible fashion.
Sticking again with SPRINGPOLE, I'm going to try to keep these things bucketed if I can. Can you comment on the cofferdams and maybe show people using Verify, you know, the structure of them? Do you foresee any challenges with the cofferdam specifically is the question?
Yeah, just give us a quick second here while we bring that up. So this will give us a sense of the you know, the layout of the site, and this area here. I think second for that to go. But that's the area of the open pit. You can see that I've circled in red there. And the cofferdams are this structure here and this structure here. So it's actually 3 dams because you can't really see it, but where I've drawn a little X there is an island. And these dams are on average about 5 meters high. So, you know, that's 15 feet. These are not really big structures, and in total they are less than 1 kilometer long. So, but what's important just to understand in the context of the size and scale of the operation that we're building at SPRINGPOLE, and particularly, you know, if you look at the size of this is the tailings and waste impoundment that we've done here, you know, mine development and particularly things like tailings dams involve an enormous amount of construction to hold back water. So that part of it really is nothing new. And if you just look at the size and scale, you can see these are these are not big structures in the context of the overall development. So then, the real risk around a cofferdam situation like this is, what if it's not competent rock at the bottom? Because then you have to somehow excavate to get down to something that's some form of competent rock, or otherwise compensate for it. But we've done the geotechnical drilling under the cofferdam footings, and including doing a few more holes in February of this year. So we're very confident that, from an engineering perspective, this is all doable. And the costs of this, again, overall in the context of the total development costs that we've been looking at, it's a very small percentage. I think in the PEA, the cofferdams and the dewatering was scoped at, I think, $30 or $35 million in the context of an $800 million development. So it's not an enormous spend in the context of the project. So and again, there's been a lot of work done on them, and I think nothing gives you the confidence of your ability to do it like when you paddle a canoe, around this area particularly. In that part, you can almost touch the bottom with your hand when you're in a canoe. The next section that's kind of one of the deeper zones, but there's a lot of this is a shallow bay of a lake, and that's part of the reason why, again, we have some real confidence of our ability to do it.
When it comes to advancing the development of SPRINGPOLE, can you comment on the team itself, the strength of First Mining's team's ability to achieve the development of SPRINGPOLE?
Yeah, well, listen, I think it's one of the things that we have made, some significant strides in over the course of the last 18 months. I arrived at the beginning of 2019 and recognized that, we did need a bit of a different skill set technically on the team than we had, particularly sort of in the senior leadership areas. And that's why I brought in Ken Enquist. And Ken's got a long background and very successful track record of taking projects, not just from, through PEAs and feasibility studies, but, actually long background in operations and development, and really across the technical and areas of the mining sector. So no, we think that with the team that we have now, and you always rely to a degree on external consultants and partners to help us, particularly in the scoping. But no, I think we have a team both on that technical side, and then with David Machina, who's leading our environmental and community relations, and leading the dialogue with our Indigenous communities. I think we've got some really great team members. Listen, I think one of the opportunities of having this strategic financing in place is that we will be able to augment the team. We run pretty lean, and always have when you look at the context of developing a project of this size. But no, we're confident we have the team to be able to get this project through the end of the CA process.
In regards to the stream deal that we just announced with First Majestic, do you believe that'll encumber First Mining and raise concerns for potential strategic partners?
No, I alluded to that before. That was really one of the key considerations in the ultimate sizing and structure of this stream. It was big enough and weighted enough up front to give us the capital and certainty of the capital we need to really get a bunch of the critical work done at SPRINGPOLE. But it's small enough. It's only on the silver, so it's kind of monetizing just a byproduct credit. And so we think, particularly with a buyback in place, which adds a little bit to the cost in the end, but in the context of the overall development, we don't think is overly significant, and is certainly not going to impair the project. We think that even with that silver stream in place going forward, it leaves the project with really robust cash costs, all-in sustaining costs, and leaves us in a very good position to continue to talk with other potential partners for the longer term who may want to be, part owners or owners of the project, and would have more capability to finance it and take it through construction. And our view on that, I think, is 100% aligned with First Majestic. So again, they're great partners, will be very helpful with us, both from an operating perspective and from some of the technical perspective. They have an immense investment in technology, particularly processing technology. So we're going to be able to leverage that. But just, the experience of that team is something that, you can't rent or buy. So we're very, very excited to have them on as partners. But I don't think that precludes or encumbers the project in any way going forward.
Before I dive into a few more questions around the stream deal itself, one more question from Paul Morris in regards to the location of SPRINGPOLE itself. So can you please give a few examples of other projects that are under a body of water that have been successfully mined?
Yeah, I mean, I think if you, I think before I joined, used to have pictures of this in the presentation, so maybe we have to bring those back. But I think you look up in the diamond mines in the Northwest Territories, just to kind of give you a bit of an example. Those would be often open pits of ore bodies that are sitting under shallow lakes. They're often, they've been developed with ring dike systems, so where you actually have to build, a cofferdam around the entire project in order to dewater it and execute an underground or an open pit mining plant. So there's those. I think Agnico's Meadowbank. I'm not sure if Meliadine has degrees of cofferdams. All of those are, it's a technology that's not. It's not rare in mining. It's also not rare in other forms of development. If you're looking at hydropower development and other things, this is not a novel technology by any stretch. And if you look in Ontario around in the last few years, a number of the other projects that have been permitted, I don't think they have the same degree of cofferdam and dewatering of a bay like we would have, but there's certainly no shortage of water around projects like Côté and around projects like Hammond Reef that Agnico has got its federal EA approvals for last year. That is the reality of the topography that we're in, and it stretches all across the Canadian Shield. There's lots of lakes, and so there are processes in place to deal with getting the approvals to modify those lakes. But one of the really important things about SPRINGPOLE in the end is that at the end of the mine life, importantly, this really does you remove the cofferdams and it becomes a lake again. So your net your net footprint at SPRINGPOLE through the entire phase of the development, I think, is going to be very, very small relative to a number of other open pit mines that, as it turns out, if it's a big open pit at the end of its life, it's probably going to end up life as a lake anyway, because most of them will fill up with water. So, we think, again, on the net footprint here, SPRINGPOLE has some real benefits like that.
We're going to move forward with questions around the streaming deal. There is a close relationship between the management and share ownership of First Majestic and First Mining. What conflicts exist, and how was that handled prior to making the decision to move forward with a stream with First Majestic?
Yeah, I mean, that's a very important question to address, because this was the streaming deal was the result of a process, and it was the result of a process that we embarked on more than a year ago. And we've talked with many of our shareholders on the phone here over the last year about the importance of us looking for strategic partners and the importance of us looking at other non-equity dilutive financing structures. So we had very robust discussions with a very large number of potential partners, and continue to have those discussions moving forward, and we'll continue to have those discussions. But in this, for the funding that we were looking for SPRINGPOLE, it was, it became clear to us as we were having these discussions that the team at First Majestic, by virtue of having seen First Mining kind of grow up in their offices over the course of the last 4 or 5 years, there was just a much deeper understanding of the projects there. So it kind of led when we were starting to think about streams and how do we make sure that we're leaving the project unencumbered. Selling another royalty versus a stream. If we could get something that would just leverage the silver versus an overall metal royalty or something that was focused on the gold, we thought that would be really positive because you're essentially leveraging some of your byproduct credit. And had a number of discussions around that. And in the end, finding someone who just wanted to deal with the silver there was a more limited audience, but that was sort of where First Majestic got interested. But those discussions then evolved and turned into a proposal that turned into negotiations. But again, that's at the tail end of a year-long process. So I think we're very comfortable that relative to the alternatives that we had, and that were apparent to us at the time, this was, by all measures, something that we thought was superior for our shareholders. And then the internal processes there. I mean, this was something that the details of which were fundamentally negotiated, between First Mining and First Majestic, and obviously our chair is in a unique position between the two. But ultimately, at all stages going through this, even approving the first term sheets, it went back to the boards of both companies, and so independent members of the board reviewed it, and for the reasons that we have decided to move forward with it, and the reasons that First Majestic thought it was an attractive investment proposal, we ended up in a position moving it forward. But ultimately, on our side, as we approved the transaction, we have 2 of our 5 directors are First Majestic employees. They both declared conflict and didn't vote on it. And I think, similar process going through the First Majestic side. So, there was some real governance and rigor around governance as we went through this process. And, I think the most important point to take away is that this was the result of a very broad market canvas and a lot of conversations had over the course of a year with a number of parties.
Thanks, Dan. And I think it's also important to note that we did have a financial advisor on the transaction as well to kind of bolster that kind of the discussions around any potential conflicts. So
yeah, I think that's right.
And when it comes to the Silverstream transaction, is it subject to First Mining shareholder approval?
No, it's not. It's not. It's not subject to approval on either side. It's been approved. We're just basically going through closing mechanics at this point.
And can you provide a bit more clarity around the warrant pricing and how that came about? There's some sentiment that pricing might have been a bit low, and I know markets have shifted a little bit in the last couple of weeks.
Yeah, these deals don't happen overnight. We were negotiating this in early May, and I think when you go back to look at what our share price was in early May and see what that premium would have looked like versus a 22-cent share price, I think everyone would have been quite happy with what that premium looked like. Our share price has moved in the interim, so there's some there's some degree of hindsight looking at it and wringing our hands a little bit had we delayed, but at the same time, I think overall in the realm of our other sources and opportunities to raise the quantum of capital that we were looking at, we were comfortable with it. But fundamentally, that warrant pricing is a result of, the fact that it takes from kind of signing letters of intent and agreeing commercial terms to announcement. There is a lot of work in documentation and due diligence that needs to happen, and so that does take some time. And so that warrant price looks less attractive than it would have had we been able to announce on the day that we set it. But if that's only because our share price has moved up, and in part our share price has moved up in reaction and response to the transaction with Treasury and Goldland and Goliath, we'll accept that. But if we're happy the share price has responded positively.
So another question from our shareholder Tybalt, and something I have been asked in the past. Do you think we'll ever see a merger between First Mining and First Majestic?
Thibault, thanks for that. Right now, when you look at the kind of stated strategic direction of both companies, I don't foresee it. First Majestic is and has always been really silver focused. And I think that's where this opportunity kind of came up, is that, they also have come to realize that finding primary silver projects, doesn't leave you necessarily that broader runway, and particularly when you are really focused on one country. So I know that First Majestic has been looking for investment opportunities outside of Mexico for some time. But no, I think in the stated strategies and the direction that we're going in, I don't think a merger is in the cards. I guess you never say never, but no, I think from our standpoint, we're delighted to have them as a more firmly entrenched strategic partner. They're already a shareholder. They've been a shareholder since inception, and obviously our relationship with Keith is critical to all of us. But no, I don't foresee a takeover bid coming anytime soon.
And one last question on the silver stream before I move over to our other transaction from Marvin, a shareholder in the US. He's asking, with our funding agreement, is First Mining or First Majestic getting the better part of the deal, or would you consider this more of a 50-50 win?
Listen, I think this is a win-win. I think good deals are ones where parties come in with different objectives and work creatively to try and satisfy those objectives. And I think when we look at the outcome of this negotiation and where we landed, yes, and I think First Majestic's getting a great deal. I really do. I think that silver stream is very valuable. But I also think that they are taking a risk at an earlier stage of development than most people would on a stream. You might see a small royalty type transaction done at an earlier stage on something that was more exploration focused, but for development projects that were like this, that we're scoping through, it's very we're very aware as First Mining and thought quite hard about the fact that the closer you get to a construction decision, the more valuable a stream like this becomes. But let us not forget that First Majestic is advancing these funds against a project that doesn't have a pre-feasibility study yet, and is still in the permitting process. So they are taking a degree of risk as well, and that explains what I think the returns are going to look like to them. But for us, it was the ability to really tailor this stream such that it was the right size. It's not too big. It didn't come with, an extra large amount of construction financing that we needed to agree today and price today. It leaves us flexible to continue to pursue those types of structures going forward. It leaves us flexible to continue to discuss, broader advancement of SPRINGPOLE with other partners. And most importantly, it leaves us with all of the capital we need to see this project through to what we think are going to be the really critical value milestones. And just so we're all clear on what those numbers look like, I mean, based on our PEA at a $1,500 gold price, which is, you know, getting to be the analyst consensus right now, the after-tax NPV of SPRINGPOLE is $1.2 billion US. And development projects with permits should trade at 0.5 to 0.7 times that number. So we're still a long way from that kind of value, particularly when, you know, we think that you can demonstrably point to $100 million of other value in our share price from a couple of the other deals that we have done, both, you know, Treasury and Pickle Crow. So I think we still have an enormous value runway here, where if we're maybe seeing $100 million of SPRINGPOLE in our market cap today, and we think that, you know, as it advances and we take the risk out of it, that should be, you know, 600 or 700 or 800 US. So that pretty quickly gets you up to a number like $1 billion Canadian. And in a more rapidly expanding gold environment and higher gold prices, who knows? So lots of value to go from here.
I'm conscious of time, given we still have a lot of questions. I'm going to move on to the Treasury acquisition of Goldland transaction that we announced recently. And on that note, just want to let people know that there is a frequently asked questions section that has been posted to our website in regards to that transaction. So Dan, can you provide a bit more clarity on the distribution of the Treasury shares, when that will happen, and why that's not happening on closing of the transaction?
Yeah, so I mean, really, it's not happening on closing because it has a lot to do with SEC registration laws, and for us to be able to, or for Treasury to be able to distribute those shares to predominantly our U.S. shareholders, would have required some pretty onerous, you know, regulatory and filing commitments, which some, you know, timing can help clear. So that was kind of the 6 months to a year. So that was a part of the original impetus of the structure. The other part of the impetus of the structure for us is that it's important, as this project is being scoped and moved forward. It's really important for us that we feel like we can, as First Mining, still have a hand on the steering wheel here, because we really need to make sure that we're bringing together all of the best of the ideas and the understanding of these two deposits as we move them forward, both on Goldland and Goliath. I mean, there's been an enormous amount of work done on both, but we really wanted to be a part of the team in scoping how it moves forward, and that's our technical team continuing to be involved. That's 2 of 4 members on the technical committee that's going to be making the decisions about the development plans. And we're aligned with Treasury on this. In all of our discussions, you know, we've seen the same vision about what we think these projects can become, but we really wanted to be, you know, in the room and part of the decision making for the first year as we kind of get this thing launched in the right direction. So that was another part of it that was important for us. So the timing, there's a practical timing for all of us would be around our AGM next year, which would be about a year from now. Going through the same process that we would normally in distributing an AGM, but we'd probably call an AGM and an EGM, and have that general meeting with a record date, you know, call it 30 days beforehand. And on that record date, if you're a shareholder on the record date, like you would get your proxy material, you will also get material around a vote on a plan of arrangement, which will describe what we're going to do. And then at the closing of that, you know, vote on it at the AGM time about a year from now, and then there'd be a reasonably quick process, I believe, to distribute those shares out. So it would happen a lot like if you own shares of a company that gets acquired by another company, you end up getting their shares. It's a lot of a similar process to that. So it kind of happens that you will find them in your brokerage account, you know, on the day that the transaction happens. So there's still some mechanics that we need to work out on how it all happens, but that's the general thesis. And again, on the FAQ section of the website, I think you can get some pretty helpful examples as you're, if you want to think in and dig into the numbers a little bit more about what might be distributed. But yeah, I think that's the general gist and timing of it.
Yeah, and we encourage people, if you have any specific questions, just email us, info@firstmininggold.com. We can get back to you and help you out with the specific questions you have about the distribution or the transaction itself. So on the theme of moving Goldland and Goliath forward, can you briefly comment on sort of the priorities that are expected when it comes to the Goldland development? Will Treasury be focusing more on Goliath, or will they be working in tangent on the two projects going forward? Just briefly, as we're running short on time.
Yeah, no, I think the game plan is to is first and foremost to spend the next 6 months really scoping what these projects look like together, because there are some important elements of how you then move forward for Treasury to complete the provincial permitting at Goliath, and you need to understand exactly what you're going to permit before you go into that sort of final stage of the permitting process. So yeah, the first plan really is looking at an integrated PEA, where we can end up giving investors and our partners a sense of what the economics of these two deposits look like together. You know, we've done some high level analysis ourselves, and you know, it's very exciting. It's very exciting. I think you have an opportunity for, you know, a mine with a much longer mine life and a much more robust profile. So, but there's still a lot of work to do, but that's the real first priority, is let's just put our heads together and understand and be able to talk about what we think the two projects can look like in a co-development scenario.
Stepping back from the two transactions that we just announced, can you comment a bit more about the broader portfolio itself, and, you know, assets outside of Canada, and what the plan going forward with those assets are?
Yeah, so listen, I think if we talk about the broader portfolio outside of Canada, you know, we announced this in our MD&A in the last quarter, but we've sold our Mexican projects and taken back NSRs on those. So, you know, they were really interesting grassroots exploration projects that we were not going to spend money on. So it came to a point where we could find a partner who is going to probably pare that portfolio down over time. But, you know, we basically have sold those now and hold NSRs on those projects. The one project we had in the US, we optioned off last year. We announced that in August, I think, of last year. So yeah, as far as we're concerned, we've retained some optionality through NSRs and moving those projects on, and we will have other people who will spend money on them. But it was a very clear part of the focus for us to keep our eyes very squarely in Canada. So that leaves the balance of our portfolio beyond the ones we've talked about. Pickle Crow, you know, a great partnership formed with Ateco, who is on site right now and drilling. Expect a resource update from them reasonably soon, which will mostly be on the historical data, but they're supplementing that now with testing, you know, some new zones. And I think it's, from what I understand, it's pretty encouraging. So there's that. Our Cameron project is a great 1 million ounce deposit that, you know, needs more work, that we haven't had much time and flexibility to spend time on. Hope Brook in Newfoundland is a million-ish ounce deposit. You know, we've been doing a little bit of work on Hope Brook. Won't go into that. Excuse me. Won't go into that now. And we still have our projects in Quebec, which we think is, you know, a very interesting area that's in some need of consolidation. So I think we'll continue to work out the portfolio. We've obviously focused on the highest priority and most impactful ones right out of the gates, and that's what we've delivered in the last 6 months with Goldland Goliath and with Pickle Crow.
Just a couple more questions before we wrap it up, as we are coming up on the hour. From one of our longtime shareholders, Chris Lehman, is congratulating you on the deal, Dan, and has a question around the GDXJ. You know, we were removed last year due to liquidity requirements. Any kind of foreseeable future where we could be re-added?
Well, thanks, Chris. You know, listen, I've kind of come to realize I don't think you run your business around an index. If you get into it, great. But no, the liquidity requirements to be removed are substantially lower than the liquidity requirements to be included. But listen, we've been trading at a couple of really good days in the last couple of weeks, and some excitement and enthusiasm about the news here. You know, we've been trading in a few days over $1 million worth a day, but you'd consistently need to be trading $1 million US. You know, can't really control our trading volumes, but I think as the company continues to grow, I think as excitement builds, I think as we start seeing, you know, some revaluation of SPRINGPOLE based on, you know, what is the actual risk of moving it from here through to those key milestones. Yeah, I'd be optimistic that we could get included again. But no, we won't quite be planning on it. If it happens, we'll let you know closer to the time when it looks like we're getting there.
And one last question, news flow and catalysts for the balance of 2020 and going into 2021. Can you comment a bit on that, as I think that helps bring momentum to the stock?
Yeah, absolutely. So, you know, we still got a lot of work to do to get these the deals that we've announced closed, and that I think is going to be our number one priority over the course of the next few weeks here. And then the news flow and catalysts. You know, we're remobbing to the environmental programs and the work going on back up at SPRINGPOLE. That I think as we get some clarity and wrap up a couple of other important pieces of work around our PFS, particularly around metallurgy. I think we'll put out an update to give people a sense of where we're going with that. And so far, it's very interesting. And then on the so I mean, the biggest catalyst in the sites right now is the SPRINGPOLE PFS, and we're aiming for that really toward the end of the year or very early next year. And in between here and there, continued work on the portfolio. I think we're going to see some interesting drill results and, you know, a resource update or two from our partners at Ateco on Pickle Crow. I think we're going to see continued, you know, interesting news flow continuing to come out of Goldland and Goliath as that gets rescoped. I think, you know, that's going to be a reasonable driver of value for all of us here going forward. And then, yeah, potentially some news on a couple of the other projects, but, you know, our real focus is on SPRINGPOLE. We'll bring everyone up to date as we kind of round the corner into the fall on what's been done and what's left to do, and give some updates on some of the technical work there. But no, really driving toward that PFS, which we think is really going to be planting a flag on a really strategic project. And really going to demonstrate the value that we think is in this project and in the company.
Thanks, Dan. Yeah, just to reiterate, you know, there is news flow coming with partnerships in place to continue to drill the properties. So at Pickle Crow and Goldland, you know, we're excited that we'll continue to have news flow through the year into that bigger announcement in early 2021 with the PFS results. So on that note, we are going to conclude the question period, and I apologize to anybody that we weren't able to answer your questions live. We will, you know, if you have submitted your email along with your question, we will try to get back to you shortly. And with that, I'm going to pass it back to Dan for some concluding remarks as we wrap this up. Thanks everyone for joining.
Okay, yeah, and thank you everyone for joining. You know, we really are blessed with such an engaged shareholder group that's here to join us on a Friday morning or a Friday afternoon, depending on where you are. But you know, I really do hope that as shareholders of the company and as partners, and you know, some of our analysts that are following us, hope everyone can take away from this that there are these last couple of transactions that we've announced in the last 10 days are really fundamentally important to changing the risk profile of First Mining as an investment. And this has always been an amazing portfolio of assets, but I think now that we can very clearly say we've got SPRINGPOLE funded to move through the EA process. We have the company funded, through 2023. I think that does really answer one of the big questions that we have always faced. And I hope our shareholders can appreciate that, the steps that we've taken have been well thought out and thorough and done with a very clear view of trying to minimize some of the dilution to our shareholders, which we've continually heard from all of our shareholder base is very important. And so we want to thank you all for your ongoing support. And if there's any questions, don't hesitate to reach out to us. Most of you have our contact details, and you can find them on the website. So thank you so much for joining us again, and we'll continue to look forward to connecting with you on updates in the future.
Thank you, Dan. And that concludes First Mining's webcast and conference call. Goodbye.